Hi there. Tell me, do you want to make money with NVIDIA stock? If the answer is yes, then you have to ask the second question. How much money can you make with this stock? Because as you can see, for the last 5 years, the performance was great. An increase over 1700%. That's amazing. A stock like this and you can become a millionaire if you invest every month. As long as the stock price goes up 10x and you invest every month, you can easily become a millionaire. Now, what's important is that if you want to invest now at the current price of $746, and as you can see, the market cap is around 1.8 trillion, you have to ask the question, how much can NVIDIA go up from the current level? Can you have again the same performance over 10x in the next 5 years? Some people may think that can happen, and others don't. That's why it's quite important to assess how much can NVIDIA can grow in the future, and then to think if you really want to invest in this company, because you don't want to buy at the highest peak as it happened in 2021 and then to have a decline of 60%. You want to buy when the price is low and have an increase of over 400% or even better, over 700% in the last 5 years. That's why it's quite important to look at NVIDIA, especially at their fundamentals. As you can see, they reported an amazing growth rate in the last quarter, Q3. The revenue has increased by 200%, and this is quite amazing. Also, the net income, as you can see here, has increased to 9.2 billion in just one quarter. So an increase over 1000%. If they keep growing in this way to have this amazing growth rate, then you can hope for another 10x or even more in the future. But only if they keep delivering this amazing growth rate. The net income to grow by 1000% quarter by quarter and the revenue to grow by 200%. If this happens, then the stock price is quite cheap at the current level and the market cap can go to many trillions. But as you know, this is not a story. This is real life. This is a real business. And because there is competition, other businesses want to develop the same thing to take advantage of those huge profits, then their future outlook may not be that amazing. Of course, they will keep growing, but don't expect the same growth rate over 1000%. If you look at what the market expects, you can see that their net income is expected to grow a lot in the future. Most of their growth came between 2023 and 2024, when the net income went from 4 billion to 27 billion, what the market expects this year, and then from 27 billion to 66 billion. This is what the market expects. So, as you can see from these analyst estimates, the revenue and earnings are expected to grow more in the future. But the growth rate won't be that high, over 1000% or 200%. They will keep growing, but don't expect that high growth rate. So when you look at this picture, what the market expects, and at the current market cap of 1.8 trillion, you might say that they'll do well over time. But you also have to think of your money. How much money can you make in the future with this growth rate? What the market expects. Of course, if you look further at their segments, you can see that they have data center, where the revenue went up over 200% year over year and 41% quarter over quarter. So as you can see, they had an amazing growth rate year over year, but this growth rate quarter over quarter is slowing down. That's why the analyst expects the revenue to slow down. Won't grow that much, 100%, as it happened from 2023 to 2024, but it will grow by 30%, 40%. As you can see, the revenue is expected to grow from 59 billion to 94 billion in 2025, then 112 billion, and so on. So the revenue may double in the next 5 years. Now, if you look at the other segments, gaming, the same thing. You can see a growth rate year over year over 80%, but quarter over quarter about 15%. So again, the growth rate is slowing down. You can easily see here, year over year and quarter over quarter. Same from professional visualization. The revenue went up 100% year over year, so Q3 2024 and Q3 2023. But quarter over quarter, the revenue has increased only by 10%. For automotive, you see just a small increase, but you also have to look at the amount. This segment represents only 261 million, but the other segments represents more, 400 million, and they're gaming over 2.8 billion, and of course data center over 14 billion. So this segment automotive doesn't count that much for the total revenue, which is over 18 billion. Now, if you look at their outlook for the next quarter, the revenue is expected to be about 20 billion. So it will grow from 18 billion Q3 to 20 billion Q4. So as you can see, the growth rate won't be over 100%, but it will be slower. That's why you have to take into account this growth rate, because this high valuation or the future stock price will depend on their future growth rate. If it's higher than expected, then the stock price will go up. But if it's lower, then the stock price may remain around this level or it will go down. You can also see their gross margins, which are over 74%, and this is quite high. It's great if they can maintain those high margins, but it's unlikely because there is also competition. More players want to develop what NVIDIA does to take advantage of those huge profits. So the future outlook of NVIDIA is great. They keep growing, but your future investment may not be that great. If you want to calculate the fair value of this business, you can easily take the analyst estimates, what the market expects in the future, their earnings, and try to value this business. So if you look at the risk, if NVIDIA delivers over 60 billion in earnings, so not free cash flow, earnings, then the market cap, the fair value of the market cap may be around 800 billion. But of course, this is the risk. They may deliver those numbers, but their growth rate may be slower than expected. And the market cap can decline more than 50%. As the stock price now is $700, it might go to $300 if their growth rate declines. This can happen. As I said, competition may lower their profits, and that can happen. Now, the great scenario, if they keep growing and their growth rate may be high for a longer period, and they deliver over 60 billion in earnings, then their fair value may be around 1.4 trillion. And as you can see now, the market cap is around 1.8 trillion. So the current level, NVIDIA, is overvalued. You can also look at the fair value per share, which may be around $600. And now the stock price is over $700. So even though NVIDIA delivers over 600 billion in earnings, still at the current level is overvalued. Of course, if they keep growing by over, let me show you, 1000%, I mean their net income, grows by over 1000%, then NVIDIA is quite cheap at the current level. But this is just a story. They can maintain this high growth rate. They might grow by 20%, 40%, or 15%. That can happen if they can maintain the quality of their products, so that the competition can make better products than NVIDIA. If they succeed, then forget about those estimates. Their earnings will be much lower. Because when another product occurs on the market, which does the same thing at a lower price, then NVIDIA has to lower their prices. And if that happens, then the revenue declines, also the gross margins, and also the net income. So competition is a big risk for NVIDIA. And if you want the normal case, the fair value may be around 1 trillion if they deliver those estimates and they keep growing. That might happen. So the fair value per share may be around $400. But be aware, these are the analyst estimates. You can trust them or you can ignore them. Now, as I said at the beginning, when you invest, you have to ask the question, how much money can you make? And when you look at NVIDIA and see this market cap of 1.8 trillion, you can think of this company as an elephant. You buy a huge elephant and you expect that elephant will grow more in the future. And you ask the question, how much can that elephant grow in the future? And the answer is obvious. If you buy a big elephant, like NVIDIA, with a market cap over 1.8 trillion, then you can expect a lot of growth ahead. I mean, from your investment. Of course, that elephant may get fatter. It might gain some weight. Same for NVIDIA. The market cap may go to 2 trillion or even more. But don't expect a double or a triple from the current level. There is a limit. The stock price can go to the moon. I mean, to have the same performance as it happened in the past. More than 70x. This won't happen again. That's why you have to be aware of the valuation, look at the fundamentals, and see their future growth rate, or assess their future growth rate. And you can also look at the market, what the market is expecting in the future. Of course, they expect high earnings, but as the market cap is so high, over 1.8 trillion, your investment won't be that high. So it's up to you. If you believe that NVIDIA can deliver this amazing growth rate, I mean to maintain this amazing growth rate over 1000%, then as I said, NVIDIA is cheap at the current level. It's a bargain. But if they don't deliver this huge growth rate over 1000% in their earnings, then NVIDIA is overvalued at the current level. That's why you saw the estimates, the fair value based on all scenarios, bad, great, and normal, and you can easily see that in all scenarios, the stock price is overvalued, quite overvalued. And a decline of 50% from the current level can happen anytime. That's why you have to be very careful if you decide to invest in this company. So it's up to you. If you want to take that risk, you can invest right now in NVIDIA. But if you don't like to lose your money, then you will be very careful if you decide to invest in this company. And if you have other questions, please let me know in the comments.